Alright, I'm gonna make this video and try to make my life easy. Um, Let me pull up something cleaner. That'll do. Okay, so we'll just do Apple. Um, just as a fundamental principle, I want to approach things with the mentality of buying low and selling high. In order to just establish a very quick and easy reference point for what I consider low and what I consider high, that's what these lines represent. Where, if this is the established middle, the average of all of the data collected for all of the sales progressing over an entire year, this is the middle. And so obviously this is high and this is low. Uh, Fairly simple, fairly straightforward. What these lines represent is one standard deviation away from the mean and two standard deviations away from the mean with half marks, marked out in between. This will come out to about 68% of all of the data points if we don't refer to this as like a price or a dollar range. If we just consider these data points collected over a certain amount of time, 68% of the data exists within this range and this range, with these being the outliers and stretching all the way up into what it would amount to like 98% possibilities, all the way out to here. So then this would be like a 2% probability statistically, all the way down in here. And then if you called it, 2% here and 2% here, I think it's actually 96. But what that effectively means is that when you acquire all of this data, only 2% of it's going to lay outside of here. So if we ever see anything way up or way down, like way, way up or way, way down, that is an extreme outlier and shouldn't exist. And so we can immediately just sell off there or buy down here, knowing that it's highly, highly unlikely that it's reasonable to expect that to remain there. And that's basically what this entire thing amounts to, is that it's reasonable to expect that we can buy this with the expectation that we can sell it up here at some point in the future. And so that is the general principle that I kind of build this off of, is buy low, sell high. This is what I refer to as low, and this is what I refer to as high. And then I can just follow it up and down. It automatically trends it out, and the expectation based on the market is following all of the data collected price points. So, accepting the idea that everybody participating in the market is smarter than I am, then I can accept that all of these prices, where people are essentially voting every day with their wallet and voting whether they think that this price is good or this price is bad by buying or selling. And over time, it starts to create a trend where people are voting with their wallets every day, and based on their financials, based on the collection of everything they can find out about this company, it has a regular progression to it. And what the market has decided after voting, every day, and all of that data is collected, is that Apple specifically is over time worth more, and that we could reasonably expect out here at the end of 2022 that Apple would be worth $236.61, roughly, in this area. If we continue to follow the trend, if we continue to progress out through time, that all of the smart people have decided that at this date and this time, Tesla or Apple would be worth $2.36 or $236.60. And so that's the general principle of what I look at here. So then the second fundamental idea that I would want to be working with is dollar cost averaging. That when it is low, I want to be able to buy as much as I can. And if I have access to a certain amount of funds every Friday because I have a job and a paycheck's coming in, then when it's low and when I'm considering this to be low, then I can dollar cost average by just buying every Friday. I like Fridays. I like to talk about Fridays because that's the day that most people get paid. And so on a Friday, you might be buying here, and then 7 days later you might be buying here, and then 7 days later you might be buying here, and this is slightly above here and slightly above here, but accumulating this over time while it is in the low section will average your costs out to something that is generally acceptable. If we looked at what it would cost to buy, say, 100 shares here, and 100 shares here, and 100 shares here, and 100 shares here, then the price itself didn't matter because it would average out to something you would be comfortable with, and it would average out to something that is also significantly in the green. And then over time, because this is traveling upwards and the market is continuing to decide that Apple is worth more every day, what you had paid for progressively also becomes worth more every day until the time that we get to here, where from here to here isn't as much as from here to what it eventually becomes here, which would be unacceptable on the data collection. And we progress through time, now it's even more acceptable of a price. And so we get a much larger range plus dollar cost averaged in here when the market was low. So those are the two basic principles that I work under. Is I want this to be low, and I want to sell it for higher, and I also want to accept that everybody else is smarter than I am, and so they have decided that Apple is worth more and that it's progressively growing, and then I don't have to dig into their fundamentals and pretend like I can read all of their financial reports and know exactly what's going on. When they release their earnings, and all of the New York Stock Exchange mega traders, they have bots and algorithms and completely mathed out programs that dissect all of that information within seconds and immediately decide how that should reflect on the market. And so then I just trust the idea that when they crush it down here, I'm just going to buy. I can't work as fast as a programmed computer that dissected an entire earnings report and decided what was going to happen. So I can't wait for the news. I can't wait for a catastrophic event. I can't wait for Apple to reinvent the wheel and then announce that as news because you're too late. And so instead, I just buy all the way through this section here and then sell it when it's high. Now, if I was to overlay Apple with AMD, then we had selling here in last December, and then we had buying opportunities here in April and selling in July. So that is December, April, and July. And if I throw AMD on here, then we had December was selling on Apple, but AMD is low. And so we could have been buying AMD. And then at the time that we're selling AMD here in March, on Apple's chart in April, we could then sell this and be buying Apple, and then be taking Apple up, and then we sell Apple, and then down here where we would have sold in July on Apple, we would then have a buying opportunity to take this money and put it into AMD. And so we just go from one to the other, and from one to the other, and from one to the other. And I have 7 others to continually try to find something to work into. And so out of the companies that I pay attention to, I like Apple, AMD, Google, Meta, which is Facebook, Microsoft, Nvidia. This is the triple Qs, which is the NASDAQ. This is the SPY, which is the S&P 500, and then Tesla. So as far as what I trade or what I work within, it's going to be Apple, AMD, Google, Facebook, Microsoft, Nvidia, and Tesla. 7 companies, and that's all I look at. That's all I care about, and they give me enough rotation within their charts to always be moving in and out of something while taking 10 or 20% returns off of each rotation. So that's just the general principle of how I lay this out. Then the next thing that I would want to consider is that when it's high, it's going to go low, and when it's low, it's going to go high. But once I have decided what is high and what is low, then I want to know when it's going to happen and approximately where it's going to go to. And so that's what I use these for. It's just an additional indicator. So if I use this as an indicator to tell me if it's high or low, and to tell me what all the smart people are progressively doing, I'm using this one to tell me where. So this tells me where it's at, and then this tells me when. So this is where, and this is when, and these are the companies that I do. It's just 3 fundamental things that I repeatedly do, and that's it. That's all I do. All day, I just look at high, I look at low, and I look at when and where. I don't use anything else, just these 3 simple ideas. A stock that is consistently good, that everybody's heard of, like Apple, so that I can explain what this company is in 10 seconds instead of trying to explain what some weird, obscure company is getting into. If I had to explain this to my grandma, I want to be able to explain it to her in a way where she could look at it and say, I understand what you're saying. And that's how simple this needs to become. And so that's it. Low, high, and when, right here. So the when, these lines here, the red, the orange, and the green, these are called Bollinger Bands. Again, they just represent a standard deviation away from the mean. That's all that this is one standard deviation away from the mean over a set time period, and that time period is 29, which is, it's effectively 30. So over 30 data instances, this is one standard deviation away from what is considered the average. And so you can see here that it is reflecting data that was acquired back here and saying you are above one standard deviation away from what was considered average. And so then this is trying to catch back up. That's not necessarily what I look at. What I look at is the blue line here, where this is the average of everybody who has bought it. So this average is where the majority of people that are participating in Apple are in at. So at this particular moment, it's July 22nd. It's July 23rd, 2024. Majority of people are in Apple for 206.69. They are significantly up. When this broke out of the standard deviation, then what that is saying is that is like a psychology type of idea, is that majority of people are likely to start selling and taking profit because it has exceeded so far beyond the normal that a large portion of people, where the average has even exceeded what is acceptable on both ends here, the average has exceeded what is acceptable within the data, that a majority of people are likely to come and sell it, and so then it needs to come and clean this up. This is like it's like a ghost in the past when we are out here. There is unresolved business back here and unresolved price action, and so when people start selling, then what happens is majority of people say, well, I'm okay with taking profits so long as it's above what I am in for. And majority of people are in for 206.97. And so when the selling starts, then people say, I'm willing to sell all the way down to at least 206.97. I mean, that's what I got in for. Or conversely, I'm willing to buy all the way up until at least, what majority of people had paid for it. It's just an exercise in psychology. And this is just built on the statistics of what majority of people as an average are in for at the time versus what is statistically acceptable within one standard deviation. And you can see over time we have 1, 2, 3, and an upcoming 4th instance of this occurring. And so when this is up, we just watch the blue line, and when it breaks out, we start expecting the price to come back into this region and clean up this unfinished business from before. So I see this here, and I see it in December. It doesn't start to even begin until January. This is December 11th. 3 weeks later, January 2nd, it starts to break down. It took 3 weeks to fulfill that movement, but it was still expected, and so we don't get caught up here. When this is, like, say we were buying all the way back here on the chart somewhere, we would be selling here expecting the rollover, and then it comes down. So that answers my when. I'm going to be selling here. I'm going to be selling it at a high. It could be high here, it could be high here, but this is telling me that this is now the high. It doesn't have to be exact, it doesn't have to be precise. I just want to be sure I'm making money. And so then I'm selling up here. And then I have nothing for 3 weeks. It starts to fulfill the idea that it's going to come down, and it gets a pop, but I'm not interested in this pop. I'm not interested in this here. I'm interested in being down here. And I can wait because I have multiples to fulfill this way down here type of movement. So this one doesn't interest me, and this doesn't interest me, and this, and this, and this, and this, until we get to here. And now I start to become interested, where the people have voted and the people have decided that now is the time to start considering an up move. And so now we're low. We're obviously low. It's within these green areas. Instead of red, it's green, and I like green because green means go. I've colored these myself. That's how simple I've made it. Green means go. This tells me it's getting into buying time, and then I get from April 1st until April 30th, which is 4 weeks of Fridays, as an opportunity to start accumulating these shares. And then it progressively takes this long to come all the way up, and then I sell it. Now, these are large time frames. This is within a year, and there were 4 opportunities. Well, there's 3, and then 1 that's upcoming here soon. So the expectation on Apple is that it's going to roll over. It may not be tomorrow, it may not be the next day, but I am not interested in Apple because the rollover is expected here. And so Apple is out. Like, if I just progressively just look through these very quickly and say Apple is high, there isn't anything that's telling me I should be interested in it. So Apple is out. AMD looks good. You know, it's getting into this low section. Google is high. Meta is it's about average, and I mean, that's okay for Meta. Like, you know, good for Meta. It's going to be worth this at the end of the year, roughly $640. So it's got a $50 move in it, but it's high, and so we're going to pass on Meta, and we just do this. That's it. Microsoft looks okay. It's down in the lower areas. Nvidia is about average, and Tesla is very high, and so Tesla's out, Apple's out, Google's out, Facebook is out, Nvidia is out, Tesla is out, which leaves us the decision to move into Microsoft or to move into AMD. And if we look at a smaller time frame, we are down here at 146 and down here at 416, I believe. 416. So if I look back on the yearly chart, because this won't reflect on the yearly chart because it still believes it's up here because this is an after hours, but we are actually down here right now, 416 on Facebook. This was after hours, after earnings, so we're actually existing down here at the moment, which is why I threw it in as AMD and Microsoft, is because I knew it was down here. But this currently is where Microsoft exists. And if I look at Microsoft and then I draw out a line and I say, what does all of the smart people decide Microsoft is worth? And Microsoft is worth this much. If I just, shove that line all the way out. And so I say, by the end of the year in January, Microsoft will be worth 450, and right now it is at 415. AMD right now is here at 148.60, and at the end of the year it will be worth 168. So we got like a $20 move on it. But I am interested in looking at AMD, and I am interested in looking at Microsoft. These are going to be the things that I go into, and then it's going to be a 3-month plan from earnings to earnings while these are low to try and accumulate what I can on Fridays. And so if I am interested in AMD and I am interested in Microsoft, then it's just a decision of which one do I want to do. And if I look at, this is the overall Microsoft. It's the actual asset itself. And then if we look at poor people's Microsoft, it's MSFU. This is just like the SPY is to the S&P 500 and the triple Qs is to what the NASDAQ is, where they're too expensive. And so a company had created a micro version of it that we can look at, and it's a more attainable price. That is the same thing that MSFU is. It's poor people Microsoft, because Microsoft might be too expensive, that now poor people can do it. So we are at $44 on MSFU. And I want to look at what it's going to be worth at the end of the year, roughly. We're going to be at $46. And right now we know we're actually down here. It is $40.91 in after hours. So we say we're actually, roughly here. So we're actually here, and we're looking at acquiring this by the end of the year. It's $46. 40 to 46, where every $4 is 10%. We are looking at about a 15% gain on whatever we get in on Fridays. And I like the comfort of that. I really like the comfort of just being able to buy on Fridays, blindly dollar cost averaging in at what I would consider a good price on Microsoft. And then however much I get in, it doesn't really matter. The return itself is expected to be 15%. And then I'm not going to be looking to get out of it here. I'm going to be looking to get out of it up here somewhere in the red. Where if I paid a good price for it, I want somebody to pay me a bad price for it. That's the actual goal is I want to buy low and I want to sell high. I don't want to sell it for fair. I don't want to give it for what it's actually worth. I want to sell it to somebody for more than it's worth, so that one, I feel really good about it, and that two, I can also think that they feel really bad about it, and it just makes me feel better. Might be a little petty, but that's how I look at it. So if I want to go from an average cost of $40, and my expectation is by the end of the year, at some point, if we do, some kind of up move, even if it happens in here somewhere and not at the end of the year, or if it happens slightly after the end of the year, I'm not time gated in forced into selling anything. That I'll just buy it here at 40 with the expectation of selling it for 50. And then again, if I buy it at 40 to 44 is 10%, 40 to 48 is 20%, and the extra $2 is another 5%. So this is a 25% move. This is what I'm looking for. So Microsoft, MSFU, is looking to me like a 25% move in the next 3 months. And if I can just get in on those 12 weeks out of 90 days, there's 12 weeks, which makes it 12 paychecks. That's 12 Fridays, and whatever money, whatever funds can then be moved into Microsoft at whatever price it is provided. Let's pick whatever this is, 42. Any price sub 42. Somewhere from here where we currently are here, and we're going to get, some action down in this region, all the way out. And if I dollar cost average it every Friday by just buying whatever I can, I'll get really good prices that I'm really comfortable with, carrying it all the way out and eventually selling it for 50. So that would be the Microsoft idea. Then for AMD, it's going to be AMDL. AMDL is poor people AMD. And this isn't really a good reflection of the overall stock. So we'll go to AMD, and let's say from here on January, and we're going to go across through April, and we're going to extend that out. So we're going to say, because I don't even think this goes back to January, which is why this is declining like this. Because this chart actually doesn't reflect that. It reflects starting here, which is why it looks down. We want March 25th and July 16th. So we're going to go to March 25th here, and I mean, that's good enough. Yeah, that's good enough there, roughly. So as a rough idea for AMD, I'm going to be looking to buy at anything sub. Oh, I think that the actual number was 1225. Where currently we're at 1182. So we exist currently at, yeah, right there, and the number is 1285 or 1225. Good enough. Oh, I didn't click. Right there. Good enough. So anything sub here, anything sub 1225 dollar cost averaging every Friday going into the year, with the expectation of selling it for $19. If everything cost us $12 or $11 or $10, traveling all the way down maybe 10, but kind of unrealistic. We would have to reference back to AMD to actually find out. But somewhere between $12 and $10, we will get 12 weeks of Fridays, rough guessing and realistically, from like here. The move up was about a month. Down was like 2 weeks. So up, down, that's a month. This move from here to here is a month. Down is another month. So if we say even just, it'll just take us a month to get up to here, and then progressively moving up. But this is where I want to sell at 19. So with an average cost of $12. If I just throw away 11 and 10 and just say an average cost of $12, every 10% is $1.20. There is from 12 up to 19 a difference of $7. And if every $1.20 is 10%, then we're at 120, 240, 360, 480. $6 is good enough. That's a 50% move. So everything that I would be getting in on Fridays, I am expecting a 50% return back up to what it's actually worth by the end of the year. So the decision would be then, do I want to do AMD with an expectation of 50 or Microsoft with the expectation of 25? And the answer might seem obvious that you want the 50, but we also want to be semi-diversified. So it's okay to be adding into AMD and adding into Microsoft. You don't have to lump sum the entire thing in. You don't have to fully engage with AMD and leave Microsoft behind, because there's also the opportunity that I could be wrong. And if I'm wrong, and it continues to just track out this way and say, we don't actually want to move, then we are missing opportunities to potentially be in Microsoft, visit up here, sell it, and move into something else. And so the ability to just consistently move in and out of stuff is also important. So I'm going to be looking at AMD for under 12, AMDL. I'm going to be looking at buying AMD on Fridays for however many Fridays it allows me, under 12.25. And I'm going to be looking at MSFU for anything under 42 for however many Fridays it allows me. And if I, split whatever the Friday paychecks are, or however it is decided at the time that I decide to do it, I'm going to be doing AMD and Microsoft for the foreseeable future. Maybe I'm wrong and it happens immediately, and there isn't a whole bunch of Fridays in it. But either way, while I exist under $42 and while I exist under 12 and a quarter, these are the ones that I'm looking at, and it may potentially carry us out 90 days to the end of the year. So that's it. That's what I'm looking at, and this should cover everything for the next 3 months. So that'll be the end of that.